All right, my friends, my man Vineet writes in, hey, Josh, how are you? Thanks for the analysis regarding my low growth / deflation blog post I did to be prepared. He or she says, talking about Japan, I had this question in my mind about our assumptions of the U.S. stock market. I hear many people saying that over the long term, market always goes up or market goes up by 70% of the time, etc. Looking at the Japanese stock market, looks like that has not recovered since 1987 or so. Is there anything that makes us different from Japan to believe that such a thing won't happen here? When I ask this question to others, they say, okay, but if not stocks, then what? I agree. I don't have an answer to that question, but getting a question as an answer to a question doesn't help either. I'm just trying to see similarities or differences between the U.S. and Japan to understand the likelihood of us facing similar stock market returns like Japan. Basically, no growth over 30 years, which is a typical retirement duration. I think that's a great question, Vineet. I find it frightening that people by default say the stock market is always. We have, basically since the modern era of 1914, we got 100 years. So to say it's kind of like if you look at the satellite temperatures of climate of the world, it goes back to 1978. We don't have enough history of this. There's just not enough to say this has happened or this is. We just don't know. We're ignorant. For the markets themselves, I mean, literally the market, we got 100 years. And if you look at the history of those 100 years, was the U.S. is number third best or something like that? I mean, just so not only do we have a short history, to extrapolate that to the U.S. when we're in the top three, I mean, it'd be kind of like looking at what's the greatest hockey team? The Montreal Canadiens. So we should invest in the Montreal Canadiens. But that doesn't make any sense because the Canadiens haven't done anything for 20 years. But historically, they have. Same with the Yankees. Now the Yankees are doing good this year. I get that. But still, it's the same kind of thing. I mean, that doesn't make any sense. I find it to be simplistic to say the market goes up. And I'd make that argument myself. I say, people say, should I do a lump sum or not? I say, you should do the lump sum because historically the market goes up 55% of the time on any given day, 60 to 65% on any given year, 80% of the time on any 5 years and such. But you can't extrapolate that to the future. You just can't. There's just not enough. What's up, buddy? There's not enough. We don't have enough evidence to say, because don't forget, markets are human and you can't predict a human being's behavior at all. So what's the alternative? That's the thing. I don't know. I go with stocks. There are two things you can be doing that you should be doing: paying down debt and investing in stocks. Three things: paying down debt, investing in stocks, and having cash in CDs. Why? Well, paying down debt is a way to guarantee you don't owe money. All right, let me get this little guy here. He wants to be in the video. All right, so you pay down debt, you guarantee you don't owe money. That's a big deal because owing money is a cash flow outflow. All right, you're outflowing cash, and you don't want that, especially in a times of turmoil if markets go crazy. Having cash on the side allows you to avoid pulling stocks when they're down. All right, and one of the things that the books talk about, deflationary stuff, is that during times of crisis, what happens are people sell at a loss because they have to raise cash quickly. And so it's like fire sale stuff. I mean, and that's just all there is to it. And so a guy like Warren Buffett, who had tons of cash on the side in 2007 and 8, was able to buy up Goldman Sachs stuff for cheap because they needed cash infusion. And Warren Buffett was the only game in town. So he risked holding a bunch of cash for many, many years, and it paid off, like crazy once the calamity came. But 3 is stocks, because at the end of the day, you're sitting there, okay, I have no clue what's going to happen. I do know that I use corporations every single day. I buy Amazon, I buy Walmart, I buy Costco. Here's some Walmart almonds I bought just yesterday. I buy. I frequent these stores. My frequency of these stores gives them money that they can turn around and pay employees, which they will then frequent those stores as well. You would go a little bit more automation. We're going to have less labor costs, which is going to give these corporations more profits, which will be hopefully sent back via dividends for sure. A lot of companies are buying back shares, which are limiting or basically decimating the supply of available shares out there, which helps price. A lot of companies will pay more in dividends, probably not as many. A lot of companies will go private. And when they go private, it means there's less and less stocks out there for you to buy. There's less publicly traded stocks, which means inherently when you have less supply and you got the same demand, actually increasing demand, that's going to increase the price. I guess you could say a fourth would be real estate. I mean, we all need a place to live, right? So we all need to buy stuff. Where no one's going back to the days of agrarian economy where you're growing your own food for sure. No one's doing that. I mean, some people are, but what I mean by that, no society is going to go back that route unless the Green New Deal comes. But we all need a house. We all need goods. So stocks of consumer products, in my opinion, way to go, which is why I like value stocks. Investing in real estate, i.e. paying down debt. People still need a place to live. So that would be my recommendation for me. I appreciate the answer. The question is a good one. There is no right or wrong answer here. No one knows. But don't go with the assumption it has always happened, thus it will happen. That's not good. You can't assume that. You can hope that. Pray for the best, but prepare for the worst, man. That's what you got to do. That's why you need cash and pay down debt. All right, we'll see you.